Good afternoon, ladies and gentlemen, and welcome to the Argo Blockchain Q3 2021 Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself, given the attendance on today's call. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard and will notify you by email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll, and if you would give that your kind attention, I'm sure the company will be most grateful. And I'd now like to hand over to Tom Devine, Vice President of Investor Relations. Good afternoon.
Thanks, Mark. Before turning it over to Peter, I'd like to go over some quick disclaimer language. Comments made during this call may include forward-looking statements within the meaning of applicable securities law regarding the future performance of Argo Blockchain and its subsidiaries. These statements are current expectations and as such are subject to a variety of risks and uncertainties that could cause actual results to differ materially from current expectations. These risks and uncertainties are described in more detail in the Risk Factors section of the company's filings and reports with the Securities and Exchange Commission, copies of which may be obtained at www.sec.gov. Subsequent events and developments may cause these forward-looking statements to change. The company specifically disclaims any obligation or intention to update or revise these forward-looking statements as a result of changed events or circumstances that occur after the date of this release, except as required by applicable law. In today's discussion, we will refer to non-IFRS financial measures, including mining margin and EBITDA. For a reconciliation of these measures to the most nearly comparable IFRS measure, please refer to the reconciliations provided in our earnings release published yesterday, which can be found on the Investor Relations page of our website at www.argoblockchain.com. Finally, this conference call is being webcast. The webcast link is also available on the Investor Relations section of our website. I will now turn it over to Argo Blockchain CEO, Peter Wall.
Thank you, Tom. Nice to be with everyone this morning, this afternoon. We're in a variety of time zones. Ourselves on the management team, just kind of a quick lay of the land. So presenting today will be myself and Alex Appleton. Our presentation will be about 30 minutes. We'll go over our Q3 results, and then we'll open it up for questions. Also on the call from the management team, we have Sebastien Chaloux, our Chief Strategy Officer, and Davis Zapfi, our General Counsel, and you guys have already met Tom. So let's get started. All right, so the third quarter was a very busy quarter for us, as I think a lot of you know. And this is the first time we've held a quarterly earnings call with our investors since we listed on NASDAQ in September. So as a dual listed company on the LSE and on NASDAQ, I think most of you know we believe in providing timely updates to our investors whenever possible. And although it's not a requirement by the SEC, we believe that these quarterly calls will be an important way to keep our shareholder base informed and engaged. After all, as I've said many times before, it's you, the shareholders, that own the company. So I'm pleased to be here with you today to provide insights into our results and to give investors an opportunity to learn more about Argo. We believe we are trailblazers in the cryptocurrency world. Among other things, we were the first crypto company to issue regular monthly operational updates starting back in January of 2020, which seems like a long time ago now. The market was obviously in a very different place, and we've provided a good deal of transparency to our shareholders no matter what the market cycle that we've been in. So it's my commitment to you that we'll hold these quarterly earning calls in order to keep everyone informed. As this is our first earnings call, I also want to take a moment to give a brief intro to Argo. I think many of you are familiar with the company, but some of you may not be as familiar. We're an ESG-focused cryptocurrency mining and blockchain infrastructure company based in UK, Canada, and the US. As of September 30th, we had about 21,000 mining machines in our fleet, with a total capacity of about 1.075 exahash or 1,075 petahash. That's for SHA-256 mining, for Bitcoin mining. I think as many of you know, we also mine Zcash. About 5 to 10% of our hash rate goes towards Zcash on the Equihash algorithm. We have 2 owned and operated facilities in Quebec, which are powered by hydro. And we also have hosted facilities through our engagement with Core Scientific in the US. 3 different facilities at Core, we have machines. A key part of the Argo story has always been sustainability, which has been central to our strategy and our values since we founded the company. We're the first cryptocurrency miner that we know of to actually release a climate strategy, not just say we're ESG friendly, but actually put a climate strategy out. And the first to be climate positive, which means we mitigated our scope 1, 2, 3 greenhouse gas emissions for both 2020 and 2021, and then gone beyond. We've reached net zero and then gone beyond that. Our main strategy has always been from inception to use low-cost renewable power for all of our mining operations. And this is why we are so excited about growing our operations with a new flagship facility in Dickens County in West Texas, a facility which will rely principally on renewable energy for power. I'll get into more detail on our Texas efforts a little bit later on. Importantly, we've been able to grow our business and produce results while being climate positive. Specifically, we're an industry leader in mining margin, achieving a company record 85% mining margin in Q3, which translates to a direct cost per Bitcoin mined of $6,293 US. Another key component of our strategy, which many of you are familiar with, is our smart growth philosophy, by which we seek to optimize the timing and pricing of our purchase of mining rigs and therefore maximize the ROI on those purchases. As we say, the right machines at the right time for the right price. So let's dig into our results a little bit for the third quarter. We generated record revenue of 26 million USD and record EBITDA of 28 million USD. For our UK friends, that's 19 million pounds of revenue and 21 million pounds of EBITDA. We mined 597 Bitcoin this quarter, which was a 20% increase over the second quarter of this year. And that brings our total Bitcoin hold to 1,836 as of September 30th, 2021. Obviously, we are bullish on Bitcoin. We believe that will continue to appreciate in value. And because of this, we continue to hold the Bitcoin that we mine to the extent it's not needed to fund our growth and operations. I also want to give an update on some additional machines and hash rate that we're installing at Core Scientific that we purchased early this year. Many of you have been asking for an update on these machines. And they've been coming on a little bit later than expected due to logistical challenges in shipping machines from Asia. So currently we've installed 165 petahash of the 610 expected this quarter. Let me just hop to the next slide there. So most of the remaining 445 petahash is expected to be installed by the end of this month. There's more machines going in this week, for instance, and the balance of the machines will be installed by the end of the year. Once these machines are installed, this will bring our total mining capacity to about 1.7 exahash. We also announced on September 30th an order for 20,000 S19J Pro machines from Bitmain. These machines are expected to be delivered starting in Q2 2022 to our mining facility in Texas. And based on this order alone, we expect the installation to be finished by the end of Q3 2022. And that'll take our total projected mining capacity to 3.7 exahash. And that excludes any potential hash rate uplift from our immersion cooling tech that we're putting in Texas, and obviously any other machines that we purchase. In terms of purchasing other machines, we're continuing to monitor the market, and we'll make additional machine purchases when appropriate and announce those to the market. All right, so just a few kind of general comments on the crypto space. It's obviously been an exciting few months. It's an exciting few years. It continues to be a dynamic space, never boring. This year, obviously, in particular, has been pretty incredible. Most recently, with the ban on cryptocurrency mining and then cryptocurrency trading in China, there's been a huge influx of miners coming to the United States. The US now represents 35% of global hash rate. Then you add another 10% of the global hash rate from Canada, and North America represents almost 50% of global hash rate. If you go back, a year ago, this is something a lot of us were talking about, but the fact that the hash rate has migrated this quickly to North America is really extraordinary and has happened much faster than anyone expected. We're also seeing increased adoption of Bitcoin in the global financial system. Financial institutions are becoming more comfortable with investing in Bitcoin. We recently saw the launch of some Bitcoin futures ETFs, and this continued adoption is also showing up in the form of increased institutional investor interest in crypto and crypto mining as a way to gain exposure to Bitcoin and other cryptocurrencies. Obviously, we are very excited about the prospects for crypto in general and Argo in particular. And that brings us really to the reason we're here today on this quarterly earnings call. And that's that in September, we listed on the NASDAQ in the United States. It was a big moment for us and something that we're proud of. Took an enormous amount of effort from our team to get it over the line. It was more complicated coming from London than if we'd been listed in somewhere else in North America, for instance. We strongly believe that a dual listing makes sense for Argo, as accessibility to capital is really important to the growth of our company. Many of you were calling for this strategy for a long time, and we heard those calls. And the NASDAQ listing gives us access to the largest pool of capital in the world. As a result of the listing, we're able to raise approximately 115 million US net of fees and expenses. And this capital is already going to work for general corporate purposes, including specifically, obviously, the purchase of more mining machines and to build and develop out the infrastructure at our mining facility in Dickens County, Texas. All right, so speaking of Dickens County, we're going to talk a little bit about Texas. So as I've talked about many times before, Texas is becoming a very popular location for Bitcoin. The secret's out, and Texas's share of global hash rate is dramatically increasing. It seems like monthly. So why are folks moving to Texas? Why are miners setting up shop in Texas? And the answer is very simple: low cost power and an abundance of low cost renewable power specifically. In fact, Texas is the largest generator of wind power in the US. There's currently about 23 gigawatts of renewables online in Texas. And that's mostly wind. And then there's an additional 10 gigawatts of wind and solar that are coming online in the next few years. Mostly solar. So if you think wind was the kind of renewable choice of the past in the last 10 years, solar is the kind of renewable choice of the future in Texas. Oh, there's still lots of wind. Texas is obviously a very unique environment, a unique power environment, because it has its own power grid, which is managed primarily, not entirely, but primarily by an entity called ERCOT, which is the Electric Reliability Council of Texas. And because of the changing generation mix in Texas and the high peak loads that they need during the summer or the cooler winters, ERCOT offers some very interesting ancillary programs for large power users like crypto miners. Controlled load response, or CLR, basically allows miners to shut down all or part of their operations at peak times in exchange for certain types of incentives. And this mechanism allows mining facilities to provide a base load of demand for renewable power, and at the same time to essentially immediately shed load at times of peak demand. There's very few industries that have this type of flexibility, that are able to balance generation, i.e. energy production, with load, i.e. power use. So by miners kind of helping balance generation and load, we're helping to increase the resiliency of the grid and promote the increased use of renewable power in Texas. And that's not just miners saying it, that's actually statewide elected officials, ERCOT folks. There's lots of support for Bitcoin miners being connected to the Texas grid. So we're building out our Helios facility in Dickens County. It's about an hour east of Lubbock. We own 160 acres of land there that is right next door, and I'll show you some photos in a minute, to an electrical substation. And that substation has 5.5 gigawatts of power. We have access to up to 800 megawatts of power coming out of that substation. Phase 1 of our facility, which is under construction now, will be 200 megawatts, and we'll be using immersion cooling tech at the facility, which, given the dust and the temperature and just the general kind of interest now and increase in the amount of immersion cooling that's happening in the space, we believe immersion cooling is the future and will be much more efficient than air cooling, and will allow us to push the machines harder and run them longer than if we were using air cooling. We'll be hiring at least 20 local people in Dickens County, and support for the project has been very strong from the local community. I was recently down there. There's some YouTube videos on the site. Some of you might have seen, might have not seen. If you haven't seen them, it's a great community, and we made a couple nice videos, so it's probably worth checking out if you've got time. All right, so in terms of construction, it's well underway. These pictures up on the screen now were taken in the last couple of days. They're pouring the concrete for the slab for the building pad, making good progress. The building, I spoke to our team down there yesterday, and the building will start to be stood up on that pad this week, and will be installed over the next about 6 weeks, 4 to 6 weeks, and it's projected to be up by the end of the year. In terms of the what the site looks like, this is actually, I'm going to draw on here for a minute. So this is the site, the building footprint. So it's 135,000 square feet. And this drone shot was taken a couple weeks ago. So we're much further, as you saw in the last picture, we're further along with the slab now. We have our own concrete batch plant on the site. It's an hour east of Lubbock, as I said. So it's a long way to bring concrete. So we've made the decision to create our own concrete on the site. A lot of concrete needed for the slab. The building has actually started to arrive. So if you see here, there's well, most of the building is there already. As I said, it's going to start to be stood up this week. And this is how it's arriving. It's arriving in the back of shipping containers. It was built offsite. So it's essentially a big Lego project, and they'll be installing the building starting on this side and then working down that way. So this is the kind of wide shot of the entire site. The previous shot was just over here. So that's where the building is being created. Now that's the first phase, but you can see there's 160 acres of property there. So lots of space to rinse and repeat, to expand and make put up more buildings in the future. The Cottonwood substation is here, and that's where we're tapping into. And our substation is being built right here. Again, this was taken a couple weeks ago, this drone shot. So the interconnection will go like this into there, and then the power will come into there. Over here in the distance, you see the McAdoo wind farm. There's a number of wind farms in the adjacent area in Dickens County in West Texas. It's a huge place for wind. I was talking to a local the other day, and they said, finally, we've always been known as a very windy place. Finally, it's being used for something good. So lots of development happening, or development has happened, and when you're down there, you see lots of more turbines going up. All of that wind power is also in such abundance that it's causing power congestion at the substation. So by building the facility next to the substation, we're helping to provide load, and that eases the congestion. There's very little local load. The nearest large city of Lubbock uses about 400 megawatts, and we'll be using, and that's 200,000 people. We'll be using 200 megawatts at our facility alone for the first phase. All right, so here's the Cottonwood substation. As I said, it's 5.5 gigawatts of power, and this is what we'll be tapping right into. The vast majority of the power coming into the substation is coming from renewable power generated in the area. When we were down in Dickens County, a few weeks ago on our trip, we spent a lot of time with the community. The local judge, Dickens County Judge Kevin Brendel, is the highest ranking elected official in the county. He's very excited and supportive of the project. Dickens County is in a rural area of Texas that has been historically very reliant on agriculture as its primary economic engine, but a lot of those jobs have left. So Judge Brendel and the community really appreciate the opportunity and benefits that Argo can bring to the county in the form of jobs, tax revenue, future development. So while we were there, he helped organize a community barbecue, kind of a getting to know you event with the community. We had about 300 folks show up, and we introduced, Argo, explained, what Bitcoin mining is, what cryptocurrency is, and talked about our plan to develop a world-class mining facility in the community. As we're investing millions of dollars into the county, we feel like it's important for us to be good corporate citizens and good neighbors and build strong long-term relationships. So we announced our first public service project, which is the refurbishment of the community pool in Spur, which Spur is the largest town in Dickens County. It's a town of about 1,200 people. And the pool has been closed there since 2009. The county has been unable to find the funds to refurbish the pool. So we're excited about the opportunity to give back to Dickens County with a project, that is needed and has been very well received. And we hope that, shareholders and stakeholders appreciate our efforts in that regard. As I mentioned earlier, there's really strong political support for crypto and Bitcoin mining in Texas. During my recent trip, I had the opportunity to participate in a panel at the Texas Blockchain Summit, very well organized event. The Texas Blockchain Council put it together, and they're doing a terrific job of mobilizing and advocating for the crypto industry in Texas. There's a tremendous amount of support for cryptocurrency mining in Texas right now, and we're excited to be there. All right, so with that, I'll turn the presentation over to our CFO, Alex Appleton, who's going to walk us through our financial performance for the quarter.
Thank you, Peter. As Peter mentioned, we had a strong quarter from a financial perspective. It was the highest revenue quarter that we've had to date, generating nearly $26 million of revenue in the quarter, which was an 8% increase over the previous quarter and a 360% increase over the same period last year. The primary drivers for this increase are an increased mining capacity, coupled with the recent rise of the price of Bitcoin that we've seen. In the first 9 months of 2021, we generated nearly $69 million of revenue, which is a 238% increase over the same period in 2020. In the third quarter, our net income was $17 million, and our year-to-date net income is $28 million. So 2021 is continuing to be a strong year for us. Long may that continue. Our gross profit for the third quarter was $31 million. Some of the more eagle-eyed amongst you might notice that that's higher than our revenue for the period. How is that possible? Well, it's due to the change in value of our Bitcoin holding, which is reflected in the income statement in the line change in fair value of digital currencies. So in the third quarter, when there was a significant increase in the price of Bitcoin, which goes into this calculation of our gross margin, you see this volatility and this change in our gross profit. However, in terms of our Bitcoin, our mining margin, which is defined as mining revenue less direct costs divided by mining revenue, that stayed relatively consistent in the 80s. Onto our average direct cost per Bitcoin mined. And I want to go back to a metric that Peter mentioned earlier. This is the direct cost of Bitcoin mined. And for the third quarter, we mined Bitcoin at average direct costs. So this is direct costs are our power or hosting costs per Bitcoin of $6,293, which at the moment is 15% of each Bitcoin's fair market value. So this is the inverse of the mining margin that we often discuss, which at 85% is one of the best in the industry, something we're really proud of. And this is one of the primary examples of how we're creating value for shareholders. We're able to mine this Bitcoin, add it to our HODL, at a direct cost that is a fraction of its market value. So it's a good business to be in. Over the past year, we've continued to increase our mining capacity and the efficiency of our fleet. And this, coupled with the increasing Bitcoin price, has driven our mining margin from 52% in Q4 2020 to 85% this quarter. And this is why we've achieved such a steep rate of growth. Critical to this strategy is the cost of power. And once our Texas facility is online, our cost of power, and therefore our direct cost per Bitcoin mined, will be significantly less than what it is today. So our mining margin versus Bitcoin price. So while the price of Bitcoin is obviously, a key driver of our business and our profitability, it's not had an outsized impact on our mining margin. So throughout 2021, we've seen the price of Bitcoin going from $29,000 to over $60,000 where it is today and back again. However, our mining margin has remained relatively consistent, as I said earlier, at over 80%. Onto our balance sheet. Now, our balance sheet has been strengthened significantly this year, especially taking into account the recent capital raise as part of the NASDAQ listing. In addition, I'd also highlight our holding, which at the end of September, our digital currencies holding was 1,836 Bitcoin, which at that time was valued at $79 million as at the end of September, which is a significant increase from the $4 million at the end of 2020. We had 86 million of cash on hand at the end of the quarter, some of which subsequent to the quarter we've used to pay back part of the Galaxy loan. So as at the end of September, we had $45 million loan with Galaxy. We've paid $25 million of that back, leaving us with the remaining 20 million Bitcoin backed loan with Galaxy. We have very little debt overall, even adding that in. We have the lease, we have the mortgage, and we have that Bitcoin backed loan. And with our cash on hand and our hodl, Argo has sufficient flexibility, to pursue our strategic growth plans in Texas, infrastructure, machines, etc. So that's all I wanted to highlight. And now I'll turn it back over to Peter. Thank you all.
All right, thank you, Alex. All right, so we're going to open it up for questions now. Tom has been gathering them both. There were pre-submitted questions that folks sent in, and then there's been questions that are coming in through the Q&A chat on the side here of the that you guys have been submitting as we're going. So, Tom, do you want to just start firing them out?
Yeah, thanks, Peter. So our first question comes from Ramsey El-Assal at Barclays. Do you anticipate purchasing additional mining machines for the West Texas facility? And if so, how are you thinking about the timing of your next equipment order?
All right, maybe I'll start that one, and then Sebastian, you want to jump on after me?
Sure.
So thanks for the question, Ramsey. Of course, we want to fill up Texas as efficiently as we can and as quickly as we can. And Davis and myself and a couple of us other folks were down at the site recently, and just standing there, seeing that power right next door, seeing the renewable power off in the distance, it really feels like the only constraint is capital to build out that site. It's just really exciting. It literally feels like Bitcoin mining nirvana. So we've put an order in now, which is kind of a base load order for 2022. That's 20,000 machines. It's roughly 60, 70, 80 megawatts, depending on how we run them, which means there's room for more growth there. And so in terms of how we think about purchasing machines, again, it's about smart growth. So we're looking for machines that we feel like are going to ROI in that 12 to 18 month window, that are available to be installed along the time frame that we need. There's also creative. It's not necessarily about Bitcoin always. Obviously, again, we're starting with the S19s, which mine on SHA-256, but there's also opportunities to look for coins that are outside outside the box a little bit. We've done that in the past with our Equihash miners. And then there's used machines. There's lots of different opportunities to build out that, the roster of machines in West Texas. And Seb's kind of in charge of that. So maybe I'll let him add some more color to that.
Thanks, Peter. So yeah, there's 3 areas we're looking at to add machines. As Peter said, we're always about smart growth. So we're constantly looking at different options. We're obviously looking at the main manufacturers like Bitmain and MicroBT, but we're also looking at the machines on the secondary market, especially given the performance of those machines in immersion cooling. But we're also always looking at other suppliers, potentially altcoins, that we might identify from time to time, such as Epic, for example, for new orders.
All right. Thanks, Ramsey, and thanks, Seb. Tom?
Yeah, our next question comes from Darren of Tahi at Roth Capital Partners. At the Texas facility, is the building prefabricated? And if so, is all of the material already procured, or is there a risk of procuring materials?
Yeah, thanks for the question, Darren. So the building is prefabricated. It's arriving in containers. The last container is scheduled to arrive this week. And in terms of the rest of the procurement that's needed, that was done a long time ago, Darren. Thankfully, all of the low voltage transformers, medium voltage, high voltage, we put those orders in very early on. So we're feeling really good about the timeline that we have set, which is opening the facility end of March, early April 2022. Very late Q2. Very late Q1 or early Q2.
Our next question comes from John Peterson at Jefferies. Where do you expect your total exahash capacity to be at the end of the first quarter 2022? And how should we think about the deployment above the 20,000 miners that we recently announced?
Seb, do you want to take that one?
Sure. So we have that, as Peter said, we have that 20,000 miners order. That's kind of a baseline that's adding approximately 2 exahash to our overall capacity. As we said earlier, we are always on the lookout to add to our capacity. We have much more power available in our West Texas facility. So we're on the lookout, and we will definitely take any opportunity that we see that fits in our current smart growth strategy.
All right. Our next question, Peter, has come from our shareholders. One question we've been getting a lot of questions on has to do with the dilution from additional equity offerings. Can you comment on that?
Yeah, sure. Obviously, this is something that a lot of shareholders have been giving us feedback on, both through reaching out directly to the company and through social media. And the way we look at fundraising, the way we look at growth, is essentially we know that we need to grow to survive and to thrive in this business long term. And there's 3 levers that we can pull on in order to fund our future growth. The first lever is selling Bitcoin, selling cryptocurrency. The second is raising debt, and the third is raising equity. Over the course of the history of the company, we've pulled on all 3 levers. For the first few years of the company, we really only had the option of pulling on the first lever. And if you go back to 2020, we sold a lot of Bitcoin. And in retrospect, that was a painful. You look back and you're like, no, about the Bitcoin we sold in 2020, but we didn't have a choice. We didn't have opportunities or very few opportunities for debt and equity. Then fast forward to this year, we've pulled on the debt lever, we've pulled on the equity lever. Debt, we've done. We have a mortgage on our facilities in Quebec. We've done a Bitcoin-backed loan. We've done machine financing, and we're comfortable with all those decisions that we've made around debt. On the equity side, we've done 3 different fundraisers this year, raised just under 200 million. That's a decent war chest in this business, but this is an expensive business. It's a capital-intensive business, and I understand that people get frustrated about dilution. I'm a shareholder in other companies as well, and you always want to own as big a piece as you can. But what we're really focused on is long-term growth, long-term success, and where are we going to be in 6 months, 12 months, 24 months? How we get there is the decisions we make today about what we're doing, and that's why we're excited about Texas. That's a huge opportunity for us in Texas. I can't overstate how important that low-cost power, that low-cost renewable power is going to be for us to be the captains of our own ship, for us to be able to control all aspects of our mining operations. We haven't had that luxury so far, and it's really an enormous step for us, particularly because we're doing it with immersion, which is going to be, we feel, the best immersion system for the lowest cost out there. Then you add in kind of all the other things that we're doing on the non-mining side of the business, which we haven't really talked a lot about publicly, and you'll be hearing about more of that in the future. But we feel like those two kind of foundations that we're building are going to set us apart long term. There's lots of companies that are coming into this space now. There's more and more publicly traded miners that are listing every quarter. And so we need to differentiate ourselves. And the way we're going to do that is by being smarter than everyone else, and building a foundation for the long term.
Great. Thanks, Peter. Another question that we've been getting a lot from shareholders has to do with the shares that are traded on the OTCQX exchange. Can you give some background on how these shares came to be traded on that exchange, as well as how that will be impacted by the recent NASDAQ listing?
Yeah, sure. So the OTC, I always say listing, and I get in trouble from the lawyers because it's not a listing. It's a OTC trading opportunity, we'll call it, because it's not officially a listing. But the OTC came about, about a year ago. So if you go back to October, November of this time last year, we were looking for ways to access the North American market. We weren't ready for the NASDAQ yet. It was a huge, time commitment, and obviously it's expensive to list on the NASDAQ, and it's a long process. So we looked at the OTC market as a kind of a baby step into the U.S. market, and we started conversations with the folks there. Went through the process, and in late December we were listed, or we were tradable on the OTC market, and we moved very quickly through the stages: the pink, the QB, and then the QX, which is kind of the three stages. We very quickly got to the top tier in January or February, and that was great for North American investors. It gave them an opportunity to access our shares, which wasn't previously available. Because if you're a North American, it's hard to buy shares on the LSE. Most folks don't have a global equity account where they can call up their broker and buy shares on the LSE. It's hard to buy them through your traditional means in North America. So and at the same time, we started to grow as a company in the first quarter of this year, and we saw that it obviously made sense for us to start looking at a NASDAQ listing, and we started that process in January, February, and it took a long time. We just completed it in September. It was an enormous amount of effort. So that whole time frame, there was an opportunity for North Americans to buy our shares through the OTC, and that was, we think it was a good thing. It gave people a chance to participate in being an Argo shareholder. Now, fast forward to where we are now, end of September, we list on the NASDAQ. So what happens to those OTC shares? We've gone from the minor leagues to the major leagues. You want to be on the big board. We're there. And we've got OTC shareholders. So there is a mechanism to convert those shares from OTC to the NASDAQ. It's not a mechanism that's controlled or set by us, or the cost is set by us. And it costs 5 cents a share, which, is annoying. Frankly, it's not a great mechanism. We wish it was free, but it's not. And so OTC shareholders, have the option to convert those shares to the NASDAQ, or they can hold them and trade them on the OTC, continue to trade them. So that listing still exists. It's not a listing, but that, quasi listing still exists. And they can buy and sell their shares on the OTC. What we had said earlier this year was that we would give folks to the end of the year. We would support our QX listing. We would keep it till the end of the year. And then, at the end of the year, we would let it expire, and those shares would still be tradable on the OTC, but they would no longer be a QX listing. They would be a pink sheets listing. So they'd be kind of downgraded to the junior version of the OTC. Given that the expectation is over time, there'd be more and more liquidity on the NASDAQ as opposed to the OTC, because it's the bigger board and people are more familiar with it. And it's, generally brokers deal with NASDAQ and less with OTC. So we made the decision this week, which we're just announcing now, to maintain our OTCQX listing. So people have another year. So we'll do it for another year. And then people can convert, over the next year if they want, if they choose to, or if they want to continue to hold them on the OTC, they can. but it will extend that time frame for another year. And hopefully, that'll give folks a chance to make a decision about where they want to hold those shares.
Great. Our next question has been asked a lot, and it has to do with our lack of communications during the quiet period after the NASDAQ IPO. Can you comment on that?
Yeah, sure. Been a source of frustration, I think, for shareholders and management alike. Alex is smiling because we do, pride ourselves on being a transparent company. And that goes back to, when I took over as CEO in January 2020, and we started the monthly operational updates, and we started engaging with, shareholders, big and small alike, and trying to communicate as much as we could. The challenge when you're listing on the NASDAQ is you are in a regulatory environment that's very strict, and, one false move, and you can upset the apple cart. And so we chose to be, very compliant with our regulatory advisors, or listen to our regulatory advisors. And there's a quiet period on the front side and on the back side of a NASDAQ IPO. And that's just a fact of life. And so we didn't like it. We were able to, do less than we normally do across the board, events like this, social media, et cetera, et cetera. And we hope that, shareholders appreciate that, particularly now that we are in two different regulatory environments, the LSE and the NASDAQ. We have to be smart about how we engage. We want to engage as much as we can. It's in our nature to engage as much as we can. But we also have to make sure that we're on side on the regulatory side of things. So, moving forward, we hope that we continue to build trust and credibility with our shareholders by engaging like this when we can, as much as we can. You'll see our social media will start to go back to normal. But there's also times where we're not going to be able to communicate as much as we used to, given the new environment that we're in. And we hope that we've built enough trust and credibility amongst our shareholders that they appreciate that. And we're growing up as a company, and so we have to just stick true to our values, but at the same time we have to make sure that we're playing within the rules of engagement.
Great. Our next question comes from Joseph Vaffi at Canaccord Genuity. Can you discuss M&A opportunities now that you are public, and especially relative to having more capacity for growth in Texas? And how does M&A compare to simply purchasing more miners?
Sure. Thanks for the question, Joseph. So, we haven't talked publicly about M&A opportunities in the space. Obviously, the space is growing quickly. There's lots of opportunities, big and small, out there. But I can't really say anything publicly, Joseph, other than I'm going to get myself in trouble. It sounds like I'm trying to hide something. Here's on M&A. Here's what I can say. We're always looking at opportunities to partner with smart companies, to acquire people that make sense. We acquired DPN. That's how we moved to Texas. That's how we found the site. I would expect in this space in general, that you'll be hearing, that M&A is going to start to happen. In terms of big miners merging, I just don't see a huge upside there and I'm talking generally, I'm not talking about us, because, if you've got a chunk of capital, you're better to put it into miners and infrastructure than you are to buy another mining company. It just makes more sense because you can buy newer machines, et cetera, et cetera. I'm not saying that that's never a merger's never going to happen between some of the big miners, but I think that's how, if you talk to a lot of folks, that's how they're thinking about it. I think that as this space develops, you're going to start to see cryptocurrency companies, kind of take a bit of a DCG approach. If you think about DCG, they now own 180 different companies, and they've kind of keep bolting on pieces. I think you're going to see miners start to do that. But that's kind of how we're thinking about it in general in the space. Sebastian, do you want to add, or Alex, do you want to add anything to that?
No, I think you pretty much covered it, Peter. It doesn't make huge amounts of sense for the miners. But we'll see where the space goes.
Okay, our next question is, how can we ensure that our rig orders and installations don't keep getting delayed?
Sebastian, you want to take that one?
Obviously, we're exposed to the same supply chain and logistic issues as the rest of the market is. But what we do on our end is really work on what we can control. For example, strengthening our partnerships and relationships with the main suppliers, being in constant communication, and maintaining those good relationships with, for example, Bitmain, MicroBT. But we're also working on the longer term relationships with different type of suppliers, such as Epic, for example, to make sure we have access to those machines, and that those machines ordered do not get delayed over time. But again, as I said, we're still exposed to the same logistical issues and supply chain issues as the rest of the market.
Great, thanks, Seb. We got time for a couple more questions. Peter, one question that we've also gotten a few times has to do with the disclosing the price of the mining rigs that we acquire. Some of our peers have acquired or have disclosed the price they paid for new mining machines. Why didn't we disclose the price we paid for our 20,000 S19J Pro machines?
Yeah, so obviously, when we purchase machines, there's two parties that are involved in the contract. There's us and there's the seller of the machines. And through the history of the company, most of the time we've had no issues with saying to the seller, we want to disclose the price. It's good market practice for us. We like to be transparent with our shareholders. Most recently, there's been a trend with one of the sellers in the space to not want to disclose the price publicly because of competitive reasons. And we always try our best, or we've tried our best in the past, to make sure that we can disclose what machines cost, but it's not entirely up to us. And that really varies. Obviously, I've seen other miners recently announce. Hut 8, for instance, recently put out a price on their machines, but that was with MicroBT, and clearly it's a purchase by purchase decision by the seller about whether they are going to be comfortable with the price being disclosed. And that's I can't get into their head about why they would want to do that or not do that, but we've seen the trend recently that some of the sellers are not wanting to disclose the price.
Got it. Thanks. Another question that we just got from shareholders: would we consider hosting any third-party machines at the Texas facility, or will it be purely machines that we own and operate?
Yeah, so it's a good question. Obviously, there's a lot of power. We have up to 800 megawatts of power there. We don't have any plans to become a host anytime soon to compete with Core Scientific or Compute North or Northern Data. That being said, if there was a partner who had machines, or who was a good fit for us, that was looking for space, those are discussions that we would have. So I think it's on a case-by-case basis for us. If there's an opportunity for us to develop the site quicker and we think there's a partner that makes sense, we'll have a discussion with them. But for the most part, we're looking at keeping Texas for ourselves. We really like the opportunity to be able to build it out at our own pace, using our smart growth philosophy. It's a challenge on the smart growth side when you've got to deliver machines, to a certain site on a certain time frame, which we've had in the past, for instance, with GPU1, and which we've acquired, to their sites, so we don't have that problem there anymore. So we like to be able to build out, Texas at our own pace.
Thanks, Peter. Next question: Can you provide an update on our partnership with Epic?
Sure. Epic is a great partner. Just to recap the history there. February of last year, we signed a priority supply agreement with them. We were looking to buy a specific machine model from them, which was supposed to be coming out around this time this year, and then going into 2022. They had some setbacks on the technical side of pushing that machine out to the market that weren't entirely within their control, which happens when you're a technology startup and when you're developing new technology in the space. We still have a very good relationship with them. We are good partners with them. We've taken that deposit that we put towards those machines and we will put it towards other machines in the future. And so that partnership is strong. Our CTOs talk regularly. They're an exciting company. We think what they're doing is important. And going back to the question about supply chain and how can we ensure that in the future we have less exposure to some of the vagaries of the market. I mean, one of those, and I've said this before, one of the ways is to get as close as you can to the manufacturing teams. And this is like, we're in this for the long haul. And the way you're in it for the long haul is you build strong relationships with smart people. And Epic are smart people, and we have a good relationship with them. And that's kind of our approach. We're not trying to be a quick flash in the pan company. We're really trying to exist long term and thrive long term. And we don't necessarily, going back to earlier this year, we didn't have the same kind of huge amounts of cash in the bank that some of our peers had. So we've got to be smart. And we feel like we've been smart, and Texas was part of that. And then getting close to machine manufacturers and procurement is another part of it. And then non-mining is another part of it. And, you're going to hear more about our non-mining side of the business in the coming weeks and months.
All right, here's a question for Alex. This comes from one of our shareholders, Matt S. Is the debt collateralized by Bitcoin required to be paid back at a fixed price, or does the value of the debt fluctuate with the price of Bitcoin?
Thanks, Matt. And I think Peter will say thank you for giving him a little rest here. So in terms of how the Bitcoin-backed loan works, so we're just using our Bitcoin as collateral. And in terms of a loan to value, you're looking at somewhere between 60 and 70%. So if you borrow $10 million, you need to put Bitcoin at that point worth of collateral of, say, $13 to $14 million. Now, if that Bitcoin falls in value, what we were able to do is put more Bitcoin in to increase the value of our collateral and therefore ensure that that Bitcoin is not called. And the way that we've forecast that is to make sure that should we see a flash crash, should we see a fall in Bitcoin, that we have enough Bitcoin held back, which is not under the terms of that collateral, that we can fund that. So we wouldn't be in the position where we would lose Bitcoin, albeit that is written into those agreements. So it's about managing and retaining enough in our HODL that we'd always be in a position to collateralize that loan should it be required.
Alex, I got another question for you from Chris Brendler at D.A. Davidson. Is there anything one time in the tax rate, or do you think 30% is a good run rate from here?
Thanks, Chris. In terms of tax, and the thing is, as I'm sure we're all aware, is companies pay tax, not groups. So you have to think about each of the individual companies. We currently generate profits in Canada. That's where our machines are, and we generate a loss in the UK where we have our head office function, if you like, and the costs of the LSE, etc., the PR there myself, and so we have those sort of management type fees. So we generate a loss there. We can't offset them equally. So an effective rate of 30% is about what we're paying at the moment. However, going forward, as we generate more and more profits in Canada and in the US particularly, we're going to see that amount of loss in the UK be a smaller and smaller part of our overall tax picture. So I'd expect that effective rate to start to come back down to what are the tax rates that we're paying in the US and in Canada.
Thanks, Alex. We've got time, I think, for just a few more questions. Peter, I think this one's for you. Now that you've completed the listing from the NASDAQ exchange and will soon have more U.S. investors, would you ever consider delisting from the London Stock Exchange?
So look, we really like where we are right now. The LSE has been our home for over 3 years. It's a market that we are comfortable in. We have a great brand recognition in, a good relationship with our shareholders. And we're also really proud and excited to be listed in the U.S. and have access to the the kind of the capital that the NASDAQ provides, and just to be on the bigger board is exciting. So we like being dual listed. We think it's a unique differentiator for us. We expect that as the company grows, there will be more liquidity and more volume, in the U.S. And each year we'll look and evaluate, where it makes sense for us to stay listed. But at this point, like I said, I'm very comfortable with where we are, and I don't see any reason to change that.
Okay, and our last question this morning, how do we think about our Bitcoin holdings, and when would we potentially sell Bitcoin?
All right, I'm going to let Sebastian take that one.
Thanks, Peter. So our decisions around our HODL level and our ideal HODL level are really based on three main factors. First is our market analysis and our forecasts. Second, we're looking at our percentage of HODL versus the overall assets within the company and our market cap. And the third factor is our needs for fiat on an ongoing basis. So we're constantly looking at these three factors to make sure we maintain the ideal level of HODL in our treasury.
All right,
That's great. Sorry, Peter. Let me just jump in. So thank you to everybody that has taken time to submit questions both ahead of today's event and obviously during this event. I think as Tom's just said, I think that's covered a lot of the questions that have come in, but obviously you did have a lot of attendees on today's call, so we haven't had a chance obviously to go through everything. But of course we will make all these questions available to you guys after today's event. Finally, Peter, I know investor feedback is important to you and to the company, and I'll shortly redirect investors to provide you with their thoughts and expectations. But I guess if I could just ask you for a few closing comments before doing so, that would be great.
All right, thanks, Mark. Thanks everyone for attending. Looks like there was great turnout on the call. Obviously, there's lots of excitement about Argo, and we appreciate the shareholder engagement as always. You're going to start to hear from me a little bit more on social media again now that we're through the stuff that we've been through in the last little while. So yeah, I'm super excited about the company's prospects. We think we can continue to grow in a smart, sustainable way. The key for us in the medium term, short, medium term, is building out our mining infrastructure in West Texas. I can't emphasize how exciting an opportunity that is for us. We believe you can combine that with our smart growth approach to optimizing ROI in machines, being as such a leader on the ESG side of things that we are. And then lastly, our diversification into non-mining activities. We didn't spend a lot of time on that today. Keep your eye out for more information coming about the non-mining side of Argo coming in the coming weeks and months. And we believe, the sky's the limit for Argo. So thank you again for joining. Onwards and upwards.
Peter, that's very kind of you. Thank you very much indeed. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Argo Blockchain PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. Good morning to Peter and the team in the US, and good afternoon to everybody in the UK.